Welcome to the Future of Supply Chain, presented by Dynamo. Each episode, we sit down with leaders in the industry as we build the future of supply chain together. Let's get into the show. Here's our host, Santosh Sankar.
Hey, ladies and gents, welcome back to the Future Supply Chain podcast. I'm once again your one-armed host, Santosh Sankar. Joining me today is my great friend, Zach Fredericks, principal at Primary Venture Partners. Welcome, Zach.
Thanks for having me.
So we're going to cover a ton of ground today, Zach, as we have planned and discussed previously. But in the world of venture, Primary is, I would say, a household name, or dare I say it's a household name these days. But perhaps for some of our listeners who come more from industry may not be familiar. So I'd love just to do the quick 411 on Primary Ventures, and we can jump into the latest and greatest in supply chain VC investing.
Yeah, Primary is a 10-year-old venture firm, or about to turn 10 in January. The initial thesis in founding Primary, which was done by Ben Sun and Brad Sverluga, was around bringing an institutional seed firm to the New York ecosystem. And in 2014, that was something that the New York ecosystem lacked. And so for the first three funds, the primary focus was on founders building exclusively in New York. The other major thesis point in the founding of the firm was around bringing more value to early stage founders, the concept that early stage founders deserve better. And the way that has manifested itself is we call it an impact team. Many firms call it a platform team that's more than double the size of our investment team, which is uncommon at the seed firm level. And we are, specifically focused on seed, so we won't have incentives that form around devoting those resources to later stage and larger positions. And then we invest across multiple categories, but as individual investors, we're all highly specialized. And so one of the specialization lanes we have is industrials, which includes a lot of supply chain, and that's what I lead.
Amazing. And so what's the Zach Fredericks story? How did you jump into the world of supply chain and venture?
Like many, the foray into supply chain was an accident. So I was supposed to work for the State Department this summer going into my senior year, had a security clearance bounce because I'm a dual passport holder, and took a job at a startup freight brokerage called Loadsmart in 2016, doing carrier sales work, entering carrier data into a system, and really just fell in love with both the startup environment as well as the industry of freight brokerage. And so I went off on a little foray, starting a small manufacturing business, which is a story for another time, after graduating, and then worked in BlackRock's private equity group. And while I was at BlackRock, because I had that freight brokerage experience, there were a lot of deals, both growth and buyout opportunities in market, that were happening in 2018, 2019. And that was really where I started to get a lot more industry exposure. The partners working on those deals, or the managing directors on those deals, asked that I be the analyst on those because I had heard of a freight brokerage before, right? And so that gave me a little more exposure, and saw what the Loadsmart folks were doing, and jumped back in full time in 2019 to join them in a very open-ended business development role, but ultimately ended up leading multiple product teams there. And that's really where the 3.5, almost 4-year ride that I had there was where I got most of my exposure to the industry.
Amazing. And if I might say, if I recall, you are born, raised New Yorker as well. So there's something quite poetic about kind of where you're at and how the stories come full circle thus far.
There is. And Loadsmart, it's based in Chicago, but it is a New York founded startup. So there was also a lot of New York tech ecosystem in my DNA.
Amazing. And so that works perfectly, because when we originally met, you were working at Loadsmart in product. And I'm always curious to hear and understand from investors who have that experience, how has that ultimately shaped how you think about the world and perceive the world as an investor?
So there's the macro thesis that was built around my time at Loadsmart, and then there are a lot of tactical tech-related things that both of those shape the way that I approach supply chain as an investor. The macro lens was really formed in my time there between 2020 and 2021, where I saw the impact of the pandemic on freight markets and I'm not going to give exact numbers, but just for example, you could see at a fast growing logistics company, volume increased by 3x, but revenue increased by 10 because of what was happening to freight prices. And while I was enjoying what that ride meant as an operator at a company that was experiencing that kind of hyper growth, I was also very aware that this meant the cost for our customers was skyrocketing. And really what it showed me very acutely was that customers of logistics services just didn't have the optionality to be shock resistant. And that's something that has carried very much into my investment thesis now when I look at the world of supply chain technology. The other thing was in how customers adopt technology. While I was at Loadsmart, had the opportunity to oversee from a product perspective an acquisition that we made in a carrier-facing TMS that also branched into a financial product for invoice factoring, and then also tried to sell and integrate a multi or universal API to other brokers. And so all of those experiences gave me a lot of exposure into how these customers buy, what their pain points are, and that context really helps with a lot of the things that I look into in the space now.
Is there kind of a top surprise you have now that you're sitting on the investor side of the table, something that you didn't expect, or maybe was more pronounced than you had originally been exposed to or encountered in your prior journeys?
Yeah, so the big one to me was that the growth of software adoption was that which I thought was very much a dated assumption, was actually still a major tailwind in a lot of these industrial end markets. So I came in with a saying that I actually borrow from a friend of mine, Ryan Schreiber, who says, friends don't let friends TMS, because building a TMS, the capital intensive nature of building out a product that covers that much surface area, a system of record really, without a clear wedge, which is what you now see so much more frequently with AI native products, was really hard to sell and scale. And in this, but the market force of there just being a lack of that adoption and a need for that software was always there, and we knew that. And my assumption was always that incumbents will win this space, that there's no room for startups to build net new systems of record in the logistics ecosystem. And there are, I can count 3 companies and probably more that have proven me wrong and will continue to prove me wrong.
Amazing. On that point, I definitely subscribe still to some of your original belief, but the way I kind of put it to people is, what is 10x better when most things are table stakes in a particular class of software or solution? And you get a lot of ums and ahs, and usually ends up being, well, we'll cut pricing, which isn't necessarily where you want to end up if there's no end game as to how you build a fast growing and durable business at that. And so I'm going to kind of step forward here, Zach, and your background in building trucking technology is super interesting. And I'd be remiss not asking you this, in part for the entrepreneurs that are listening. What are the opportunities that do excite you, right? Where do you see gaps? What are you thinking about that you think others should also be thinking more about? And maybe why is that, right?
Sure. So I touched on it a little before, but a lot of what shapes the thesis that we have at Primary around supply chain investing comes from that experience in the pandemic, where companies were trying to react to one of the largest global supply chain shocks in history. And what we ultimately learned from that is that even though supply chain leaders are aware of the inevitability of shocks, the systems and networks they've set up are still extremely brittle. Since the 1973 innovation of just-in-time manufacturing, we've over fine-tuned all of these links in the chain to optimize for profitability, which looks great in the CFO's office. But the chief supply chain officer knows that's something that's going to fall apart, or it will have a very high likelihood of falling apart. And so I imagine there to be this conversation that exists between those two stakeholders. The chief supply chain officer says, we should build redundancy. We should increase a little bit of the cost basis we have in our network so that we're less susceptible to a shock. And the chief financial officer says, well, when is that shock going to occur? Can you put that in my model? And the supply chain officer says, well, naturally I can't. It's a shock. And so it doesn't happen. So the world, I think this is an ongoing, decades old problem, but this, I think, has become very clear to the CFOs and to any leader of a large multinational supply chain. And so the desire to do something about it is there. The problem is that there's so much cost and risk in doing so. As you expand your footprint into more, could be logistics, service providers, it could be suppliers for inputs in your finished products, whatever it might be, you engage in more risk by working with new and unknown entities. You see more cost in inevitably having to work with SMBs and companies that have less data compatibility and sophistication. That becomes a problem that manifests itself in you needing more people to manage that supply chain. And so what I call all of this is transaction cost. And ultimately what we are interested in at Primary is investing in the technology that reduces the transaction cost of building a more durable supply chain. And there are a couple pillars that we look at that in. There's the decision intelligence, actually knowing what to do and why, because so much around this is at a level of complexity that really has only been 10x better since the advent of artificial intelligence and the advanced machine learning and data science that we're starting to see gain more traction today. The areas around workflow and cost reduction in managing larger supply chain networks is also really exciting for the sake of what AI is doing. And you and I both agree, an area that we're both really excited about are business models that are displacing work and service rather than software, or trying to expand software TAM. And that's an area that we spend a lot of time in. The other area that we find really interesting is data interoperability in this space. And that might sound conflicting with the previous one, because in many circles, people view the use of AI agents as a way of circumventing a lack of API connectivity. But I still believe that within the enterprise, there's a huge desire to stitch together highly fragmented data sets to improve decision intelligence. And then finally, I think an area we spend a lot of time in is what we call marketplace enablement. And that's really helping companies reduce the risk of finding net new vendors to broaden their supply chain. And this is really, really exciting in cases when you see giant macro changes around, say, nearshoring, moving things into net new markets where previously companies didn't have operations. And so one great example of that's in our portfolio is Cargado, which helps North American logistics companies contract transportation providers who service cross-border freight. That's a huge, one of the fastest growing segments of logistics services in North America today, with absolutely zero visibility into the supply. And so that's an area where we wanted to plant a flag. And we've been at this supply chain thesis at Primary now for 2 years. And so we've got a couple of other flags planted, which I think we'll have a chance to talk about later.
Yeah, no, I think that's super interesting. And, on your statement as to how one might use AI and more novel business models to display SaaS spend, increasingly now the belief that we have is when we think about business model discovery, right, and better understanding value capture, it's quite frequently that SaaS actually ends up fairly low in the list of alternatives one could have as they think about a business model as an entrepreneur. And I think some of that is attributable to the fact that you alluded to, that there's this constant pressure and tension chief supply chain officers feel where they need to maintain, if not increase, quality of service and resiliency, maybe more specifically how you've outlined it. But then simultaneously, you're viewed to be a cost center, even though you are the value driver and the entity responsible for making good on sales and marketing's promises. There's that kind of duality, which kind of pushes and pulls you in different ways. And certainly we've seen the ability, if you could just price something for what it costs to get it done, there's arguably no better industry to be building AI products than the world you and I dwell in.
I completely agree. The opportunity to sell work or sell service as software, a lot of people call it that now, in supply chain operations is tremendous because so much of the task that's happening is repeatable, is scalable. But the way that customers have experienced software today, I think, is in kind of a mispromise on ROI. So what I think ends up happening is that, you know, and the systems of record in logistics have been around since 1990 or even before that. And what I think happens with those is that they run out of workflow that they're actually able to automate. If you're in the logistics industry, specifically as an operator, like a frontline operator, you've got probably 90% of your time is spent dealing with entities outside your four walls who very likely do not have integrated or compatible data with yours. At the enterprise, this is it's slightly less the case, but for the majority of the market, this is truth. And so the problem you then have is that you're looking at a system of record, you're copying information from that system of record into an email that needs to be received by somebody outside your four walls, waiting for them to respond to that email, and then uploading it back into your system of record. And so there's not a lot of work and workflow that gets automated. And then you have a lot of point solutions that have come out in the last decade building on top of those systems of record, trying to automate a lot of those tasks. And they succeed, but typically are forced into more and more niche slivers of the market because, again, they struggle with the interoperability piece. They have to have, for them to really automate and deliver on the ROI, they really have to have integrations with a network that's valuable to a segment of customers. And with so much data fragmentation, it's really hard to build out that surface area. And so now, for the first time, I mean, when you think about what the cost or the pain of that lack of interoperability is, it's people transferring data and doing manual tasks because there's no API. And so now you have this ability, and a lot of those tasks are done by people outside of the logistics company, they're outsourced. And now you have the ability to take that outsourced service for whatever it might be in a supply chain setting and fundamentally change the quality, the cost, and build what looks like a high margin, software business on top of it. So that's where I think there's a lot of excitement in how AI kind of folds into the workflow here. Where I get worried is that I think companies that just focus on automating the tasks as a service are at risk of getting leapfrogged. Models, Sam Altman has a quote that I'm paraphrasing, it's probably not the exact quote, but it's that the companies that bet on the models always getting better will be best positioned to succeed, right? Right now, I think a lot of this service is SaaS. The assumption is, well, the real world is very messy. And so you need to have a service that always, a human in the loop, you could say, that backstops what the AI can't do to train the model over time. And I definitely think that that's true in the near to medium term. But what happens when things like, what we've seen with Strawberry is that it can actually inform itself of the quality of its output. And as that starts to advance, we're going to need the training time, the service time, the human in the loop time is going to drop dramatically. And so what do you do to stay ahead of that and get to a higher order of value as a service provider? And I think that that's where decision intelligence gets really important. It's not just doing the repeatable tasks, but it's saying, here's how you should do it. Here's why, here's when, right? And jumping into that next level of value.
So speaking of this decision intelligence, in part, this touches on an investment you made in a company called Lyriq, right? Tell us a bit more about that. What are they up to?
So, Lyriq is a company that we backed in the summer of 2023. They are helping large supply chain organizations build custom data applications to make highly complex decisions. And these data applications leverage best-in-class data science. Operations research is really the fundamental school of data science that's prevalent in supply chain ops. But these are, AI and ML models that can be used for lots of supply planning, demand planning, inventory planning use cases, production planning, even transportation network optimization. So the use cases are very broad, and intentionally so, because the real change in the market that Lyriq is chasing is the sophistication of data science within supply chain. Before, you could be a company that had a very rigid software product, solved one kind of supply planning problem, sell it to a huge customer, and grow a pretty decent business around that. The problem is that every customer has a unique operation and needs a ton of customization in their software. So when you look long-term at how these companies that have grown, and many of them, the O9s of the world and the Coupas and the Lamasofts and all of those have done extremely well, there is a lot of customization built into those products because they are a little more rigid in their nature. They come from an era of there not being a huge amount of data science within the supply chain organization.
Yeah.
So they would say, hey, we bought this, now we need it to change. We're going to call the provider of the software and have them build that customization. Lyriq says now a company like Walmart or Nike has hundreds of advanced data scientists working in their supply chain orgs. These are people who can build sophisticated models and deliver huge amounts of value to the business side of their orgs. And so what Lyriq is enabling is those people. It's saying, hey, you can build an incredible application, and we provide a lot of the advanced modeling out of the box. So you don't have to go in and build that from scratch. You can do it faster, cheaper, and more accurately, but make sure that what it is highly tailored to what your organization needs.
So I'm going to shift gears a little bit here. We're looking at the venture market as seed investors, and there's no doubt that there is pockets of opportunity where deals go very quickly. Valuations end up in the category of what I would call stupid. Mm-hmm. And it usually is because somebody takes the AI sticker and smacks it on the side of the business. But I'd be curious, right? The supply chain market is equally challenging. We've had kind of ups and downs around volumes and rates, but by and large, we're still kind of ebbing along the bottom if you look especially at the trucking industry. And so that leaves very little room for error, in our opinion, here when raising a Series A. I'd be curious what advice you have for founders, right? Especially as folks are starting to look ahead into 2025, thinking about fundraising. What type of advice and wisdom could you impart with those folks?
There's generic advice around where the company should be going into that kind of round, and a decision around what kind of round it should be that I can give. And then there's stuff that's specific to supply chain and logistics related companies. So
give it to us.
On the generic front, I think what I've noticed is that the momentum and scalability of growth at the A is far more important than the actual top line metric. If you ask 10 investors, what metrics do you look for at Series A? They're all going to give you slightly different answers. And the truth is, I've seen things land at a couple $100,000 of ARR all the way up to 5 million at the Series A. And I think that the thing that the Series A investor wants to believe is that they can easily see how their investment is going to continue to fuel a well-oiled go-to-market machine, and B, that there's defensibility in a large market that this company is pursuing. But there's a lot more they look at than that too. They're still assessing the team, and they're still assessing customer feedback and all sorts of stuff like that. But generally, I think the scalability of growth, knowing, hey, if I put this much capital into the business now, I can pretty easily see them 3xing in the next 12 months, is what a Series A investor needs to underwrite against in the short term. And then in the long term, of course, they're looking at the larger market opportunity. The That's one, the generic side. On the more industry specific side, I really think there is a distaste these days for business models that are highly susceptible to or highly exposed to freight rates and volume fluctuation. And so if we think of freight rates moving almost like commodity rates do, it's very hard for any technology or business model that's relying on those to break that kind of fluctuation. So if you have risk to or exposure to those things or principal pricing risk built into your model, I think it's very hard to raise a traditional venture round. And but that doesn't mean it's impossible to build a great business. And there are a lot of great businesses getting built in categories that do that. I think other asset classes are probably more appropriate in those business models.
Love that. We I think generally agree, especially on your first point. I think it was really well put around repeatability and scalability of go-to-market. And if anything, I've come to appreciate that likely takes longer and probably requires a little more cash than most founders will admit to when they put together their pre-seed, seed extension, whatever you want to call it, funding plans going into that A round. But I think you certainly hit the nail on the head here, in my opinion. I'm going to bring us home here, Zach. And I would love to kind of finish out with a little bit of this or that. This is supposed to be lighthearted. I'm going to make 3 comparisons for you. And I just want your quick 10-second take on each of those. You ready?
Ready.
Trucks or trains?
Trucks. I mean, it's where my heart is, but it's also, to me, an industry that is only going to get more and more relevant as we bring on more manufacturing within the U.S. I think the future of trucking is strong, even though we're in a bit of a freight recession today.
Mm-hmm. EDIs or APIs?
EDI isn't going anywhere, but API is the future. And as more and more software permeates into these, sort of long tails of logistics and supply chain operations, API will definitely rule the day.
Globalization or nearshoring?
Nearshoring. I think that there's a lot that the economy would benefit from in seeing more critical manufacturing industries happening onshore. And I also think it has implications on geopolitical realities that we need to face. So I'm a big fan of what's happening with nearshoring.
Awesome. Well, that's Zach. Much appreciate you taking the time here, sharing a bit about your story, how you're thinking about investing in the wild, wonderful world of supply chain, and look forward to seeing your continued success.
Thanks so much for having me, Santosh.
Absolutely. Cheers.
Thanks for watching. Follow us at dynamo.vc for all the latest episodes. We'll see you next time.